And the PayPal kind of stablecoin looks like it might be the first instance of that, which is really interesting. But it's definitely a step in the right direction. Look, yeah, you can't argue with potentially 400 million active users being onboarded onto Ethereum, right? So yeah, it should be really the first step in kind of mass adoption of crypto, and it is exciting.
This week, PayPal, one of the world's largest payment transaction platforms, launched its own stablecoin. We'll be talking about what this means for not just cryptocurrencies, but transactions online overall. CONOR RYDER, head of research at Ethena Labs, is here to talk about what this means for all of us. CONOR, welcome to the show. Thank you for being here.
Hey, David, thanks for having me.
So PayPal launched its stablecoin based on US dollars, and now it's, according to its press release, it is going to be tied to US cash equivalents, so cash, treasuries, 1-to-1, so $1 stablecoin to $1 on the Ethereum blockchain. What does this mean for crypto adoption? Is this the start of everybody using stablecoins now that the world's largest, or one of the world's largest payments platforms is introducing a stablecoin?
Sure. So yeah, for crypto adoption, it's probably one of the most monumental moments I think we've seen in terms of crypto adoption and the amount of actually new users that could be onboarded to crypto. I will kind of preface that by saying should be kind of cautiously optimistic, and I can probably go into the reasons why we should be a bit more reserved and a bit more cautious about this as we go on. But yeah, to start with kind of a wave of optimism, I guess it is good news for crypto adoption, definitely. So you couldn't ask for a better partner really as in terms of a Web2 company issuing a centralized stablecoin than PayPal. They've got 400 million users, 430 million, I believe. So now you're going to get basically 430 million users with the option to have an Ethereum wallet address, transacting using a stablecoin that settles on Ethereum. Really, it's kind of exciting to think about those possibilities now. So from a crypto adoption point of view, definitely a big plus. Not only that, but also it kind of fills a big gap in the crypto market right now, and that it's actually providing stablecoins as a means of payment as well. So that's something that's been missing in crypto for a long time, like Circle and Tether, the stablecoins that are out there right now. They're really only useful for transacting on crypto exchanges, transacting on crypto protocols, on DeFi, on CeFi. But when you look kind of beyond crypto, they have kind of limited use cases right now. Despite being, I guess, crypto's killer use case is like stablecoins, but in terms of payments, we haven't really crossed that bridge yet. And this PayPal should be able to do that. As I said, you nearly couldn't think of a better partner to be able to offer a payment service for a stablecoin than PayPal. They're linked up with, I think it's 35 million vendors. They're responsible for 1.3 trillion of transactions settled last year, transaction volume. And then, yeah, so you have the likes of eBay or other kind of online vendors that could be hooked up now with PayPal and PYUSD as a result. So there's definitely reasons to be optimistic, and it's exciting that this is going to hopefully lead to a new wave of crypto adoption. But there's also, as I said, reasons to be cautious as well.
I'm going to get to those reasons. I think you've got some excellent counterpoints as well. But and I always want to discuss the technology of this particular stablecoin. But just back up for a minute and just talk more generally, philosophically, if you want. Why is this necessary for PayPal, at least?
For PayPal, they're essentially seeing this as a way to expand the use of their asset base, right? So PayPal's asset base is essentially dollars, customer dollars, and they offer payment infrastructure for those dollars. And this essentially gives them another use case for that asset base for the customers to transact in dollars, and also as a business model as well, right? So we've seen Tether lately. We've seen Tether be more profitable than BlackRock, earning billions of profit. And purely off a business model of taking on US treasuries that are earning 4 or 5% yield, but internalizing all that yield. And actually what they're doing is they kind of externalize the risk of a DPEG onto users, but internalize the yield. So from a business model standpoint or from a company standpoint, it's a great model, right? So you can take in 4 or 5% at high margins, and not be essentially responsible for a lot of the risk that's out there with stable coins losing their peg, etc. That falls on the user. So kind of looking at it as nearly really return-free risk for the users with centralized stable coins. But from PayPal's point of view, right, they're one of the kind of companies that are actually struggling right now in the NASDAQ. So the NASDAQ is up 33% year to date, whereas PayPal stock is down, I think it's about 15% year to date. So they needed this new business model, a new kind of fresh wave of transactions, new interest, and stablecoin gives them that. And you'd assume really they had kind of positive indications from regulators that this would be able to fly in the US. Which is also another reason to be kind of cautiously optimistic about this, is that hopefully it kind of brings, I guess, regulators on board, that there's an actual US regulated company, one of the biggest in the US, one of the biggest in the world, that's actually putting its name behind a stablecoin, which should be great for kind of crypto's image from a regulatory standpoint.
There have been several examples over the last 12 to 18 months that have demonstrated that stablecoins are not always necessarily stable. I don't have to remind you what happened with Lunaterra, but even more recently, USDT Tether has slightly depegged. That raises the questions of whether or not the mechanisms behind pegging are indeed safe and stable and reliable. Can you comment on PayPal's in particular, and whether or not there may be concerns down the line of the stability of this particular protocol?
Well, yeah, we haven't seen kind of the outline, I guess, of PayPal's collateral makeup. But we just know that they're going to take on US Treasuries, US cash, and kind of utilize Paxos as their issuer. So from a risk standpoint, these kind of centralized stablecoins all have similar risk, right? So they have US Treasuries on hand, and they need to have essentially as short dated possible US Treasuries so that they're extremely liquid, right? So we saw with USDC, we saw they were actually suffered because they had their short-term cash parked in SVB. So that's a risk in itself, right? So any centralized stablecoin that is tethered to the financial system, is tethered to the banking system, has that risk kind of baked into it, in that you run the risk of having like basically counterparty risk with money stored on, let's say, a bank or anything like that. But as I said, yeah, I can't comment on PayPal's risk specifically, but we've seen some of these centralized stablecoins pegs deviate slightly. And it's obviously when you start to make trade-offs in terms of collateral security or centralization, maybe like Terra did, then you start to kind of sacrifice some peg stability. But there's no really reason to indicate that PayPal are taking any kind of trade-offs like that, right? So they're going to have a pretty strong regulatory outlook, right? So they're applying via Paxos, who will custody their assets, and they're regulated in New York, who actually are one of the kind of who do have a pretty good outline for stablecoin regulation right now. But yeah, this should be down to the regulators to push on now and really outline really give some clarity to investors, to companies, about what kind of reserves they can have on hand. And at the end of the day, it's regulators' job to protect investors, and this is kind of a great chance for them to do that.
From the consumer's perspective, I'm not talking about B2B, but just B2C, for example, the consumer using PayPal, he or she's probably wondering, why would I need to use a PayPal stablecoin or any stablecoin? But let's just take PayPal stablecoin in particular. Is it going to make my transactions faster? Is it going to make my life easier in any sort of way? Cheaper transactions? What is a benefit for the consumer is my question.
Yeah, so for the consumer, if we look at kind of the traditional world, I guess, let's take eBay, for example. Did this, like the PayPal stablecoin could offer them cheaper transactions. It could offer them faster transactions as well, right? So stablecoin settled on Ethereum should be able to settle transactions within 12 seconds, the time it takes to build an Ethereum block. Whereas if you look at the traditional financial system, right? So if you needed to send a fiat wire as a vendor to accept that payment from PayPal, you need to wait maybe 3 or 5 days for that wire transfer to hit your account. Whereas this should be able to kind of offer magnitudes faster transaction speed. Also, if you look at let's say FX fees as well. So from a consumer standpoint, if you were looking at a foreign kind of vendor or foreign merchant that you're settling with, you're going to be paying FX fees through traditional banking systems, even PayPal itself. But being able to kind of send a dollar denominated stablecoin that's settled on Ethereum, your fees will be a lot lower. It'll just be the gas fees. You won't be exposed to these kind of extortionate FX fees that we're familiar with.
Now, there's still the problem, though, that once I transact with the stablecoin, I may have to off-ramp to deposit the fiat to my bank account, right? So how can I do that via PayPal, or do I still have to go through another exchange?
No, you can do that via PayPal, which is probably one of the more exciting things as well, right? So crypto has long struggled with a fiat on and off ramp, and that's one of the big reasons to be optimistic here, is that this kind of gives and fills that gap in the market right now in crypto. We do have, let's say, limited options right now. So especially with the hostile regulatory environment over the last year or so, we saw a lot of US exchanges struggle to keep up their USD deposits and withdrawals. We saw Binance US struggle. We saw a bunch of other US-based exchanges. I think OKEX's US arm had to suspend USD deposits and withdrawals. There's a few exchanges that just haven't been able to meet those USD liabilities and offer that USD fiat on and off ramp through crypto. Whereas that's one reason why this is exciting right now, is that you can actually, as I said, not only pay for things with PYUSD, which is kind of an indirect off ramp, but also off ramp into fiat, if you like. So yeah.
When something as massive as PayPal implements a new stablecoin on the Ethereum blockchain, will that impact Ethereum itself in any sort of way in terms of its supply? Well, not so much supply, but demand, fundamentals, and gas fees in particular?
Yeah, so this is kind of probably getting into reasons why I'd be kind of cautious about this. But from I guess an optimistic side of things, this will kind of like boost Ethereum's popularity as a settlement network. Ethereum will be used to settle all these fees. It'll take up block space on Ethereum. It'll increase demand for block space on Ethereum, and that should be good news for Ethereum, right? But also, it does introduce these extra kind of centralization risks. It's just another centralized player introducing a stable coin on Ethereum. If all signs are pointing towards this stable coin being pretty successful, as I said, it's got kind of regulatory tailwinds, it's got the payment tailwinds. So it should kind of increase the supply of stable coins in general on Ethereum. But the problem there is that it's increasing the supply of centralized stablecoins, right? And if you were to think of a situation, let's take the merge last year as an example. There was talk of stablecoin issuers potentially not supporting the proof of work, the proof of stake form of Ethereum. And if that was to happen, really stablecoin issuers have the kind of final say, because if that was to happen, you'd have stablecoins on the new form of Ethereum, the proof of stake form of Ethereum. That didn't mean anything. And if they decided instead to back the proof of work form of Ethereum, they have all the power really there. So veto power is a huge thing, and it's a huge centralization risk. It's a hypothetical scenario for now, but it's one which has to be kind of seriously considered if PayPal were to turn around one day and say, okay, we're basically forking Ethereum, and we're going to have the final say over how much stable coins are actually real on that network, let's say. So that's one risk. Yeah, you just kind of run the risk of centralized forces basically have an influence on Ethereum, and that's not what the ethos of crypto is, really. The ethos of crypto should be providing a kind of parallel financial system, an alternate financial system, not one that looks exactly the same as the traditional one, but just on a blockchain. And we run the risk of doing that with the centralized players in the system, right? So DeFi and CeFi rely on these centralized stablecoins as it stands, which isn't really ideal for crypto itself. And that's kind of a reason, I guess, to be cautious about this.
Yeah, Conor, I understand the risks from centralization that you've outlined, but it sounds to me like you're outlining an investment case for Ethereum. Correct me if I'm wrong.
Definitely. Yeah. Look, obviously not financial advice, but you could definitely see this being a boost to Ethereum. And one thing that was interesting to me was the lack of reaction in the markets when this came out. Ethereum barely moved, it barely budged off 1-2%. Price action, which was interesting and probably a sign of the general apathy in markets right now. We saw kind of retail volumes at their monthly lows in July since like November 2020, I think it was. So I think this wasn't quite enough to get investors off the sidelines. I think they're waiting for that regulatory stamp of approval. That's either going to come in the form of a stablecoin bill or come in the form of, I guess, approval of this Bitcoin or Ethereum spot ETF. So that was interesting to me to see.
I want to talk about Ethena Labs in just a minute, because I think you guys are working on some interesting things in the stablecoin market as well. But just generally speaking, Conor, if you were to transact B2C or C2C to anybody, if you were to use any sort of online payments platform, would you yourself use a stablecoin? It doesn't necessarily have to be a PayPal USD. It could be any stablecoin. Would you use a stablecoin to pay your bills, for example, if that were an option for you, Conor?
Absolutely. Yeah, I don't see why not. Yeah, the whole point of stablecoins is to kind of have money that's outside of the traditional banking system. And if you're able to kind of denominate a lot of your savings in a stable coin. That gives you that protection that it's outside the banking system. Now, the caveat for that is it has to be obviously a non-centralized issuer. But yeah, I absolutely would. Yeah, definitely. It gives you kind of that, as I said, store of value protection. Ideally, yeah, you're able to kind of track, I guess, what's on the blockchain, the different movements. Yeah, 100% would.
We have to talk about then the failures of past stablecoins. Let's take Luna, for example, algo stablecoin. I'm not saying all algo stablecoins are inherently unstable, but can you maybe comment on, first of all, why that particular stablecoin failed? And second, whether or not you would attribute higher risk to an algo stablecoin versus a reserve-backed stablecoin?
Yeah, sure. So one thing that's kind of been an idea and a philosophy in crypto, right, is this stablecoin trilemma, where a stablecoin is forced to sacrifice one of either scalability, decentralization, or stability. And it's basically a thing where not any stablecoin can have all three, right? So in Terra's example, you saw them kind of prioritize decentralization and scalability because obviously they were algorithmically backed, so that helped with their scalability. And they were supposedly decentralized as well. So what they did, they kind of sacrificed stability, and it was a fundamentally flawed model, really. It was using kind of endogenous collateral, which was of its own making, essentially. And there was always a debt spiral risk that was there, and it was talked about in crypto a lot, right? So the aim is to get kind of exogenous collateral outside of your own system that can't have an influence, right? And that's the aim, really. But yeah, stablecoins are trying to solve this trilemma since the inception of crypto. And we've seen centralized stablecoins obviously sacrifice the decentralized aspect of that. And that's been really the most successful model so far. As you said, reserve backed, being able to scale using one-to-one collateral on US treasuries, US and USD cash equivalents. That's been the most successful model so far, purely because I guess we've seen maybe a disregard of stablecoins that are decentralized lately. It seems to be kind of far down the list of crypto, especially new users' priorities. They just want something that's going to be stable and scalable. But again, it goes back to the fundamental ethos of crypto, which is to kind of provide this alternative to the banking system. And if you want to do that, then you really have to prioritize decentralization with these stablecoins.
And if you were to design a stablecoin, which I'm guessing is partly your work in part, is there a perfect system? Is there something that solves the trilemma problem?
Yeah, so that's essentially, as you said, what we're trying to solve with Ethena right now, with USDE. So to give you a bit of background without getting too technical, we have tried to basically solve the stablecoin trilemma by taking user collateral and hedging that price exposure, so the user collateral is Ethereum or staked Ethereum here. And we basically hedge that price risk on derivative markets to reduce the price exposure to the collateral. So all of a sudden now we have a stable collateral asset that's not only stable, but it's also decentralized because it's Ethereum, right? And so so we've solved essentially the decentralized part there and the stable part of the stablecoin trilemma. And the last one then, I guess, is the scalability. So in the past with decentralized stablecoins, we've seen them suffer from a scalability standpoint. They've emphasized decentralization and they've emphasized stability because they take an over collateralization model. And so what Ethena are doing basically by taking this delta neutral approach, by hedging your price exposure of your collateral, you essentially can kind of have a collateral ratio of 1-to-1, which makes you a lot more scalable than a lot of the other kind of DeFi stablecoins out there right now. So that helps with your scalability. But not only that, then we're also trying to access kind of not only decentralized exchanges, but centralized exchanges as well using custody. So collateral is actually never held on a centralized exchange, but you're still able to access that centralized exchange liquidity, which helps with scalability as well. So basically, the goal of Ethena is to provide a stablecoin that can serve the masses, that can be used for 100 million users rather than some of the DeFi stablecoins out there right now, which only really satisfy kind of 1,000 whales in DeFi. But essentially, it boils down to cracking that stablecoin trilemma, which we feel we're on track to do at Ethena.
All right, interesting. And can you give us some updates on your progress so far?
Yeah, so we're currently still kind of test net right now. We're launching the test net in 3 or 4 weeks' time. And we'll have test net for a month or two, ensuring that everything's secure and we can actually kind of roll out this delta neutral approach. And once we're sure of that, we can kind of roll out the stablecoin. I think we're aiming for about end of September right now. And yeah, as I said, it's kind of we're all really excited to provide a kind of crypto native solution to stable coins right now that's decentralized, but also cracks this trilemma I've talked about.
I want to circle back to PayPal, and it strikes me that the regulators haven't stopped them from doing this. In the past, there's been regulatory issues with Meta launching Libra, for example, or the announcement of Libra. This is interesting how we've seen kind of a mute response from regulators so far. Are you surprised that this hasn't been blocked?
No, I'm not surprised, to be honest. As I said earlier, PayPal, optically anyway, is one of the kind of better Web2 companies that you could ask for to back a centralized stablecoin. Right. So the difference between that and Libra is, and if you look at kind of Meta being the name behind Libra, Meta and Facebook were kind of known for having an overt influence on like using, I guess, their centralized power. They had a kind of bad track record with that, whereas PayPal's kind of bread and butter is payments. That's all they do. That they've never shown any kind of over influence on anything really. So their bread and butter is payments, and they should be the ideal partner really to set up a kind of centralized stablecoin for the reasons we've discussed. And then also Libra also used a kind of basket of currencies as well. It wasn't just the US dollar. They were proposing that they'd kind of back their stable coin with yen and with different global currencies. So there's definitely kind of a reason for US regulators to be on board here in a stable coin that's only using US dollars and US backed treasuries.
How do you think other centralized crypto exchanges are responding to this? I'm talking about people like Binance, Coinbase, Kraken, so on and so forth, because presumably PayPal, with millions and millions of users worldwide, are able to now on-ramp and off-ramp on their platform, and they've already got a suite of cryptocurrencies. If they add more cryptos to their suite of products, why would I need to use another crypto exchange?
Yeah, I'd look at it if I was the kind of exchanges. I think obviously you raise some valid points there, but I'd look at it more as a kind of rising tide lifts all boats approach, right? So if this does onboard 400 million users to crypto, right, a lot of them are going to kind of initially, right, they'll be using PayPal and they won't really go onto the Ethereum network itself and use exchanges, but eventually they might kind of pique their interest a bit more in crypto. And then once that happens, they'll send it over to exchanges, they'll start trading more. So yeah, I think it's going to be kind of a general tailwind for the industry. And I think the exchanges should be kind of looking out for really the next onboarding scenario of the next wave of people that are going to get interested in crypto. And I think this could be it. But yeah, obviously, as I said, there's reasons to be cautious there.
Traditional financial institutions, banks, how are they responding to this?
It's probably, yeah, I don't know how banks are responding to it. Probably not great. I would say this could change. Like if you think about kind of a stable coin, this is obviously with the caveat that it is centralized versus let's say a bank stable coin. I know JP Morgan were kind of trying to, or they have their own they have their own version of a stable coin. I think it's Onyx, it's called, but that's behind like this walled garden, let's say, whereas PayPal have made the decision to, I guess, open source themselves by settling on the Ethereum network, which is really interesting. It's kind of like it's like an innovator's dilemma, right? So they're basically making the move to kind of disrupt themselves before someone else does. And what's interesting is versus like a bank that would come out with a stable coin, right? If a bank came out with a stable coin, you'd be kind of looking at that like you might be subsidizing some of their riskier practices. Like if you were, let's say with SVB, like if you were just holding a stable coin that was backed by SVB, you wouldn't be really aware that you were kind of subsidizing, I guess, their VC activities. So a payments processor like PayPal, it's an interesting, really new kind of structural issue where you're not kind of subsidizing risky activities, really, you're just subsidizing their payment infrastructure. And for that reason, yeah, it probably has more of a tailwind behind it than a bank-backed stablecoin, which is kind of super interesting in terms of like market structure.
Yeah, I think you're right. I think it'd be very interesting to see how banks foray into this space over the next couple of years with crypto products. Would you personally buy crypto products from your bank or transact with crypto through your bank? Is that something that you would consider pursuing yourself as a consumer?
Me personally, I don't think so. I think that does go against the ethos of crypto. I think the whole point of crypto should be probably to be bankless, bank yourself, self-custody. So I think that would defeat the purpose of crypto. Maybe I'm on the more crypto native scale of things. Maybe there's users there, maybe like institutions that wouldn't be as crypto native might see a bank as a good partner for a stablecoin, but not me personally, no.
I could see some people who may not be as familiar with the ethos, let's put it that way, as yourself, potentially looking into this. My parents, for example, older people who don't know how to use their phones, let's put it, they go to their bank and they talk to somebody there. I suppose they would, some demographics would benefit from a more traditional on-ramping system is basically what I'm saying.
Definitely, yeah. And this kind of boils down to why I kind of can't really blanketly say that this is like a bad or good thing, like PayPal stablecoin. It comes down to really the user, and you as a user can decide if you prioritize centralization, or if you prioritize decentralization, then you're not going to really use these centralized issuers. But if you don't, and if you're just looking for a stable coin that can give you kind of fast transactions, easy kind of user interface like PayPal could, then you're just going to go for that. But really, there's two sides to the coin, and there's a bunch of different users that each stablecoin could appeal to.
Final question. Is this the road to mass adoption, or do you see mass adoption? I'm talking about everybody in the developed and perhaps even emerging markets using some sort of stable coin, some sort of cryptocurrency, not necessarily a stable coin, rather, so some sort of cryptocurrency, some sort of blockchain technology in their everyday lives. Is this the road to mass adoption, or do you see another path?
I think it's definitely the first step in the right direction. And as I said, it's hard to think of a moment up until now that's been bigger for the kind of adoption of retail users than this. I guess the end goal of crypto is to not even realize that you're using kind of crypto in the background or using the blockchain. And the PayPal kind of stablecoin looks like it might be the first instance of that, which is really interesting. But it's definitely a step in the right direction. Look, yeah, you can't argue with potentially 400 million active users being onboarded onto Ethereum, right? So it should be really the first step in kind of mass adoption of crypto, and it is exciting.
Right. I keep hearing from people that Bitcoin in particular is a superior form of money in many ways than traditional fiat in store of value properties, potentially even medium exchange properties down the line. But it strikes me, Conor, that if this were actually true, that all businesses would be using Bitcoin to transact, or at least offer the option. Why is it that when I go to a Starbucks, this might be a very simplified question, but why is it that when I go to a Starbucks or a McDonald's, I don't have the option to pay with Bitcoin? If cryptos and Bitcoin in particular is really a very good form of money, the private sector will be using it now, right? What's stopping them from implementing this?
Probably the main one is transaction speed, really. So Bitcoin will be a lot slower than, let's say, Ethereum or an Ethereum layer 2, or I guess DeFi in general is a lot faster at settling transactions than Bitcoin can. I know Bitcoin has the Lightning Network, but there's also its issues with that. Really what it comes down to is your definition of money. If you want money that's going to be used for like payments and fast transactions, money would point you more towards stablecoin, right? But if you want money that's kind of outside the banking system, that's used as a store of value that you can kind of denominate your savings in, then maybe Bitcoin would be more suited to you, right? So it's just, again, it's down to your use case. It's down to where you fit on the scale, right? If you want, as I said, quick form of money, probably Bitcoin isn't for you. But Bitcoin as a kind of currency is more seen as maybe like a gold, where it's a store of value and you can have it kind of sit outside the banking system and not take on that risk.
Excellent. All right, Conor, where can we learn more about Ethena and your work?
Sure. So Ethena Labs on Twitter, it's Ethena_Labs. Myself is at CONOR RYDER. And we should have all of our Discord and Telegram information there. And you should see a kind of white paper and kind of FAQ going up on the Twitter soon. But yeah, you can keep up to date with us there.
Thank you very much for coming on the show today and talking about PayPal and stablecoins with us.
Thanks,
See you next time, Conor.
Cheers, David. Thanks.
Thank you for watching. Don't forget to subscribe.